Today, more than ever, your credit score is more important. And in this special episode of the Martini Mortgage Podcast, the top 3 credit score hacks you need to know will be shared. Hello and welcome. My name is Kevin Martini, and I'm a certified mortgage advisor, NMLS 143962, and producing branch manager of the Martini Group at Cardinal Financial Company, NMLS number 66247. And welcome to the Martini Mortgage Podcast, episode 129. There is no question that one who has healthy credit has not only more access to credit, but also can secure credit with more favorable terms than one who does not have healthy credit. I have found that bad things happen to very good people, and as a result, their credit gets bruised up. It is critical to share. Bruises can heal, and they don't leave scars. As a mortgage strategist, I have firsthand confirmation that credit repair works. However, it is a process, not an event. Let me share this Kevin Martini nugget with you. Working on your credit restoration is like having a cruise ship make a U-turn to get back on course. The cruise ship can make the U-turn, but unlike a small speedboat that can turn on a dime, it takes the cruise ship time, persistence, and patience to get this ship turned around. But it will turn, and it will get back on course. Now, before I share the 3 MartiniMortgage.com credit score hacks, it is important to highlight that there are 3 major credit repositories, and they are Equifax, Experian, and TransUnion. Each repository has literally thousands of scoring models that are used, and which model is being deployed is based on what type of credit you're applying for and from what industry the creditor is from. For example, if you are applying for a mortgage, there's a specific credit score model that is used, and it is different than the score model used for getting an installment loan for an automobile. And there is another model if you are applying for a revolving credit, such as a credit card. Today, there are many services that offer free credit scores to consumers. Now, I have found these are helpful. These free services provide tools to share a very general idea of your credit position on the aggregate, but they do not accurately reflect what your credit score is for the purpose of securing a mortgage for a purchase of a new home or to refinance your current mortgage. To illustrate, those free credit services will tell you if it's going to be hot or cold outside. It will share whether it's going to be cool or cold outside. They are not going to tell you the exact temperature. And this is because the free credit services do not put a weighted factor on the types of credit trade lines you have. And the mortgage model does put a weighted factor on the type of trade lines you have, as well as other things. As a primer to the 3 MartiniMortgage.com credit score hacks, it is important to know that there are 5 major factors that create the credit score from each repository in the mortgage credit score model. At a high level, they are payment history, how much you owe, how long your credit has been established, new credit you have secured recently, and your credit mix. Each factor has a disproportionate weight on determining your credit score used to secure a home loan. With that said, let me dive into the 3 MartiniMortgage.com credit score hacks to increase your credit score for the purpose to get a mortgage. Number 1, improve your credit utilization rate. Utilization is based on what you owe compared to the total credit available. And this factor makes up about a third of your credit score in the mortgage model. To be a little bit more specific, it accounts for 30% of your credit score. Improving your credit utilization is one of the simplest ways to improve your credit score. How do you improve your credit utilization? It is very simple. You pay down the balances you owe. Many say you should have a 30% limit to balance. However, I have found for the highest of highest scores, the utilization should be at 10%. Remember, the credit utilization is based on the amount owed versus the amount of credit available. For example, if you have a revolving account such as a credit card, if you owe $500 on it and you have a $1,000 limit and this is your only trade line, you would have a utilization rate of 50%. If you paid $200 down on the balance, then your new balance would be $300, and poof, you now have a 30% utilization rate. I know what you are thinking. If I only had the spare cash to pay down the balances, but I do not. I get it. So let me share an advanced certified mortgage advisor tactic to increase your credit utilization. It has two parts. Part one is buckle your belt and commit to yourself not to use the credit card in the near future. And then part B is reach out to the credit card issuer and ask them for a credit line increase. Let me get granular using this same example. Let us assume that you are granted the line increase and they raise your limit to $1,500 from $1,000. You still own the $500, but now your utilization rate is 33% versus 50%. That's a 17% improvement in your utilization. Could actually improve your credit score for the purpose of a mortgage pretty darn quickly. Number 2 of the 3 MartiniMortgage.com credit score hacks to increase your credit score for the purpose of mortgage is to become an authorized user on someone else's credit. This strategy is like giving your credit steroids because the donor's account's credit performance on the account they make you the authorized user on will bleed into your credit score. Now, to secure the maximum benefit with this credit score hack, you have to remember the 5 factors that determine the credit score for the purpose of getting a mortgage. 35% of the credit score comes from payment history. You need to make sure the person putting you on as an authorized user has a history of paying on time and flawless payment history. You also need to ensure they have a low credit utilization rate too. This is an amazing credit score hack, but remember, if the primary account holder has an excellent credit history and a low utilization rate, their positive factors will flood into your credit, and your credit score is likely to go up significantly. However, you need to know this. This strategy could backfire, and your credit score could go down dramatically if the person has bad payment history and bad credit utilization and bad credit on the aggregate. Finally, the number 3 MartiniMortgage.com credit score hack to increase your credit score for the purpose to get a mortgage is pay for delete. Collections are not a good thing for your credit. Maybe there is a vintage cable bill or a medical bill that was not covered by insurance and it has reared its ugly head in the form of a collection on your credit report. By simply paying the collection off, this could have an unintended consequence since the collection is already baked into the cake, and it could yield a lower credit score. I have found an effective way to improve your credit score is with a strategy called pay for delete. Simply contact the collection company or creditor and negotiate a pay for delete with them. Basically, what you're doing is agreeing to send the amount you owe at once, but only in exchange for a promise that you need to get in writing that they will delete the item from your credit report after you pay them. If they agree with this credit score hack, the collection will disappear from your report and the negative credit event will look like it has never happened. My name is Kevin Martini, and I'm a certified mortgage advisor and producing branch manager of the Martini Group at Cardinal Financial Company, which is located in Raleigh, North Carolina. However, we help families all over the U.S. We provide the families we serve with trusted advice with a frictionless digital mortgage process that provides certainty. You may have questions about what you've heard in this episode of the Martini Mortgage Podcast about our 3 credit score hacks, and that is awesome. I am here to help and invite you to give me a call directly at 919-238-4934. Because you see, I believe there is never a substitute for getting educated on the process of buying a home and getting a mortgage. Thank you for listening, and please share this episode of the Martini Mortgage Podcast with someone you care about. And thank you in advance for leaving a 5-star review. Now it's time for the disclosure. The material has been prepared for marketing purposes only. This is not a loan commitment or guarantee of any kind. Loan approval and rates are dependent upon borrower credit, collateral, financial history, and program availability at time of origination. Rates and terms are subject to change without notice. Corporate address 3701 Arc O Corporate Drive, Suite 200, Charlotte, North Carolina 28273. Cardinal Financial Company Limited Partnership, NLS ID 66247. Branch address 507 North Blunt Street, Raleigh, North Carolina 27604. And you can reach the branch by calling 919-238-4934. For a full list and more information about licensing, please visit cardinalfinancial.com/licensing. Equal housing opportunity. For more information about me, Kevin Martini with the Martini Group at Cardinal Financial, visit www.martinimortgage.com or call 919-238-4934.